Well, as we head into the month of December, mortgage rates are starting to tick down a little bit in some places. So there's maybe some positive news. We'll discuss that. Plus, if you're thinking ever about getting into real estate investing, multi-unit properties have been a bit of a challenge, but some changes have come down that might actually give you a better chance to begin that journey. We'll talk about all that coming up.
It's time for the market update.
All right, Ben George alongside Bill Litton. And Bill, I'm excited to kind of finish out the year. I know a lot of people probably are ready to put 2023 behind us from a mortgage lending perspective, and home buyers, right? The rates have just kind of been hanging over us for all of 2023, but maybe a little positive movement and momentum heading into 2024.
We've seen rates come down a little bit over the last 30 days, and we hope that it's the start of a longer trend in that direction, but we don't think they're going to plummet overnight. We're hoping that in 2024 we can end up in the upper to mid 5% range, but we were touching on 8.5 45 days ago. So to be now closer to 7's a big win, and we feel like that win has come because there's inflationary pressures that are easing. And some of the core inflation measurements are showing that inflation is starting to cool a bit. So if we stay in that direction, there's also been some cracks in the labor market, which was the other piece of the puzzle that the Fed needed to get their hands around. So with both of those things moving in the direction the Fed wants, which could lead to lower interest rates because the economy's cooling a bit, we feel like 30-year fixed rate mortgages should move in that direction as well.
Do you get the sense at all that if rates, say, once they kind of tick under 7, you see that 6 at the front, right? It'll be kind of a relief for a lot of people and start to kind of spark kind of a new wave of people getting back into, hey, I'm ready to start trying to look for that home again that I've maybe put off for the last 6 to 12 months.
We definitely think that. We actually see that. Things got really busy earlier this year when they got back to almost 6%. People started coming out of the woodwork, and people are paying attention to interest rates. If you're going to buy a house, that's something you're paying attention to. And as the rates get better, they feel more like they're in a position to afford the house. Or let's just say that you've, owned a home during COVID and you took advantage of a 3% rate. And you see a house that you like, but there's no real need to move. It's just some wants. You're not going to trade 3% for 8% for just a few amenities that you'd pick up in the new house. But you might trade 3% for 5.5%. That's not as, you're not almost tripling the interest rate. So we think right around 6% is where people start to get more excited and be able to accept those payments being a little higher.
It's all about perspective, right? I mean, when you look back to just a couple of years, you go, man, rates are super high. But when you've been around the rates at this level for an extended period of time, and then you even zoom out even further and you say, okay, well, people were getting into 10 or 12% interest rate on their mortgage not that long ago, right? So it's all perspective. And I know, what might have felt like an expensive price or a higher price than you maybe expected to pay might actually feel like a bit of a value now.
Yeah, exactly. And, for some of the younger generation that has only seen really low interest rates, they don't know anything different. I call my mom on the way home from work often, and she asks, how's business? And I said, well, the rates are high, so people aren't buying as much. And she said, well, what's the rate? 7.5%. She said, that's nothing. In 1981, I had a 14% rate. Perspective, you hit the nail on the head. So for some people, that really doesn't mean as much. And for the younger generation who doesn't really know about those rates, it seems like a pretty big impediment to buy.
If you want to learn more or kind of see what mortgage options are available to you, again, Bill's the regional president of Cross Country Mortgage. You can get in touch by calling 484-352-4151 or log on smartmortgageshow.com. And also tease the fact that for people that are maybe interested in becoming a real estate investor, and I think it's something that's become more popular with the advent of reality TV. It makes it look so easy, but in reality, it's a lot more of a challenge and a lot more work than many people anticipate. But, often that kind of obstacle to get in has been having to have that money up front to get started, right, Bill? But some changes that have come through recently maybe have made that a little bit easier for people.
There's two kinds of real estate investors. If you buy a primary residence, technically you're a real estate investor.
That's
right?
true.
And we've said it many times on the show, but in the United States, you can count on 3% appreciation over a period of time. So the new Fannie Mae guidelines allows you to buy up to a 4-unit property with only 5% down. Now that's if it's going to be your primary residence and if you're going to live there. But for a first-time home buyer who may not have a family, they could live in one of the units, purchase a 4-unit property, rent out the other 3 units, and then in a year or two continue to own and now rent that unit they lived in. And now they've got a really great investment property in their portfolio.
Yeah, I'm kind of curious. On every situation will be different, but how does that typically break down? I mean, when you look at the rental income that you can pull off a 4-unit property per se, I mean, can you think of it as, hey, I'm getting 1/4 of my mortgage payment paid off by each one of these units and I'm paying 25%? Is it as simple as that?
I wouldn't say it's quite that simple. So the approach that we take is it's case by case. If you go and you see a house that you like, let's plug in the numbers. Let's see what the payments are, and let's understand what kind of rents the house is currently receiving. Is there room? Maybe that landlord just kept rents steady for years, and the market would allow for rents to increase. But let's understand, what could we really get for rent versus the payment, because most investors want to make sure that at least the rents would pay the mortgage payment. And one of the things about a multi-unit property is if you had a single 3,000 square foot 1-unit property, and let's say that house would rent for $2,000 a month versus a 2-unit property where each unit is 1,500 square feet, still a total of 3,000 square feet, but because it's 2 units, you might get 1,500 a unit, so you're at 3,000 per month in rent. So usually the multi-unit play will yield more rent per square foot.
Yeah, that's interesting. And it's not something that I think that many people think about, especially when you're younger, right? I think you have your mindset on kind of where you want to live, but it seems like a really interesting option for people that are, again, trying to kind of build that portfolio and start kind of from the beginning, start small. And by the time maybe that you're ready to move into a bigger residence or a home, then now you have this kind of great asset to kind of lean on. When people come in, Bill, and say you're meeting with someone that's a first-time home buyer and they're looking at options and you kind of know their range, do you ever kind of bring up something like this to them? Or is it something that you want them to kind of start the conversation for? Because I think a lot of people, I know I would have been too naive to even ask a question about this, right? And not even kind of realizing that, hey, sure, I can maybe say, okay, I'm looking for a condo, right? Maybe I'm gonna spend $150,000 on a condo is kind of what I have in mind, or $200,000, whatever it is. Well, maybe for $250,000, I could find a 4-unit property that I could actually invest in and maybe build my net worth a little bit quicker than I ever anticipated, but just didn't realize that was an option.
So we're always going through a process of discovery to learn what is it that this individual is looking to accomplish. What are their real estate goals? Now, through that conversation, I always say we're going to talk about all the options. And please, we definitely don't. Somebody who has no intentions of ever being a landlord and no interest whatsoever, we don't want to try and turn that person into a landlord, because they're still going to be a real estate investor by virtue of purchasing just a single unit primary residence. And then we want to talk more about, okay, how is that going to impact your future? How does that get you from house number 1 to your second move up house, because you've built all this equity that you can roll into the new house? But to your point, as we go through that process and we understand their goals, sometimes it does uncover, hey, you know what? We're going to buy house A and we're going to hold it as a rental. That's part of my wealth building plan. Okay, great. So if we know that, then we know how to direct them. And then that might lead to, can house A be a multi-unit property? Because the multi-unit property is going to have advantages from a rental standpoint. So we definitely, when we talk about buying a house and we talk about the mortgage, we're always talking about the wealth building capabilities of this purchase and how really important it is. And it's funny because we always ask the question, what's your motivation to buy a house? And I'd say 75% of the time it's, I'm sick of paying rent, and this is some kind of an investment, right? They do know that it is some kind of an investment. Well, we try and like spell that out and give more detail so they can see, well, where is that investment going to take me?
All right, last thing then, Bill, just I feel like I could talk to you about this for a while, but we'll keep it short and encourage anybody that's interested to learn more to reach out to smartmortgageshow.com. When you are trying to get pre-approved for a multi-unit property, does the rent play into that? Am I able to maybe get pre-approved for more is what I'm asking, I guess, knowing that, hey, I should be able to subsidize some of that rent or some of that mortgage through the rent that I'm going to bring in?
Yeah, that's a great question. So the beauty of buying a rental property, whether it's a single unit or a multi-unit, the multi-unit calculation is a little bit different, but without getting too far into the weeds, that rental income is going to be based on a rent study that the appraiser does on the local market. That rental income that the appraiser uncovers is reasonable for the house you're buying. You can use that to offset the mortgage payment and then, in fact, not have that mortgage payment negatively impact your debt-to-income ratio. So sometimes there's almost no negative impact of that rental property on your debt ratio because we can use the rents. That's a great point.
Well, very interesting. Again, so the update being you put 5% down rather than 20% down. But again, if you want to learn more about this and see what your options are, see if it's a good fit for you, if it fits towards your goals for your financial future, again, reach out to Cross Country Mortgage. Happy to sit down and kind of just have a conversation about kind of where you want to go, what your goals are, what your plans are, and then begin from there to work towards, hey, which product's going to be best for you. Bill can be found again at smartmortgageshow.com or give him a call. It's 484-352-4151. Well, Bill, we'll close out this update on December. Hopefully, the new year will bring about some good news. We'll have a lot more favorable things to talk about in terms of rates, but I know you'll always keep us updated on what's happening in the market.
Absolutely. Thanks so much, Ben.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.